in designing this course was to make the business case for startups, as to why ESG is an important and a good offers a good competitive advantage for startups that are looking to differentiate within their market, right? And so at this point, I would like to say that I would like to encourage every one of us to really please take notes and really open up your mind to listen to all I have to say today, because this will help address some biases and help you understand what ESG really means, what sustainability within the context of business really means, right? And this is for us to the ultimate goal for us, anyways, is to you know integrate ESG for startups and let that be at the heart of their business model, to make it in such a way that ESG is part of who they are, not greenwashing, not saying they are doing this, and if you approach them, you won't see any sort of like there's a disparity between who they've claimed to be on publications, website, and the likes, and in reality they are not even following sustainable practices, right? So our goal is to really drive the ESG integration into the heart of the business model itself, and thereby making it a very core component of corporate strategy. So what that means, in anything you're doing, in any activity that relates to your business that you're dealing with, you're able to consider ESG. That is sustainability for us, ESG within the context of environmental sustainability, social sustainability, and governance structure for these two engines. I mean, whatever activity you are performing, you are thinking, how is it going to affect the environment? How is it going to affect people? Right? I mean, what appropriate governance mechanism will be needed to enforce whatever objectives that you've covered. So it's quite an elaborate process for us. I mean, the ESG integration, and it's something we've seen do amazing things, help startups, companies innovate within the portfolio of companies we've worked with, and you would also be seeing such transformation in your own business model as well. I mean, we're just waiting for things to come up to that level where you need it. But yeah, this is more introductory and just for you to have an understanding why this is important. So we'll be looking at different content. We'll be looking at why it's important a startup or business should consider ESG, and then we'll share the objective for us at Climate, why we are doing this, why we think this is important, and what is the need for startups that are aligned towards this path. And then more importantly, we'll look at making the case for ESG integration as it is. I mean, you need to make the business case for it. So we're not just telling you to save the environment or be good to people and the likes. We're also showing you why, from a business perspective, this is why it's important we do this as a company. It's why important we pursue the path of responsible business development. Then we can also just give a snippet of how we approach helping startups to do this, how we approach helping organizations to integrate ESG, and then a little bit about us. So yeah, again, you're seeing Climate logo. This is because Climate is a partner of the organization that really helps to address this aspect of ESG integration. Right. So let's dig in. So why is ESG important? Why is it something we need to consider as business owners? Why is it something we need to adhere to? Why is it something we need to consider even when designing our products? Why is it something to consider when hiring people? Why is it something to consider when interacting with our customer audience and target audience? I mean, why is it important? We've been hearing about ESG, sustainability. We hear some people tell you about United Nations goals, just like you have here on the screen. But there are different reasons why people are trying to align themselves to being responsible businesses, being environmentally responsible businesses, socially responsible businesses. So now let me sum ESG up just in a nutshell before I look at these few reasons why ESG is important we consider. So if you look at this, there are some companies you see, they will show the United Nations sustainability goals that they are adhering to, or they are linked with, or they are addressing, or they are impacting, right? So and if you look at the whole 17 of these goals, happens to be spread across environmental sustainability. Some are spread across, for example, environmental sustainability. You have you have climate action, that's SG 13, for example. Even SG 7 happens to be on that part too. Then you have those that fall under social sustainability as well, and then for example, good health and well-being happens to be one of them that falls under social, quality education, gender equality, those social issues, right? Then governance issues as well. So if you look at each of these 17 points, you see that they are, you can map them, you can link them to ESG. So for businesses, and again, I must say that these 17 goals was designed specifically for companies, for countries, right? So they had countries in mind. So what businesses are trying to do is to see and identify how they can be able to, through their business activities, help their respective countries where they're operating, achieve their set, their ambitions or targets for each of the, as the United Nations SDG goals, right? So this is why in business terms we look at sustainability. So again, all this is in line to ensuring that we are building a sustainable world and a sustainable future for generations to come. That is the core, reason, objective for these United Nations 17 goals, right? So, but now it becomes quite tricky for businesses to adopt. I mean, when you look at the metrics, when you look at the indicators and the targets, you find out that it's often difficult for companies to find how they can measure, quantify, and measure progress. I mean, on how they're affecting each of these guys, right? So the appropriate way, or one of the ways we've discovered as to how to engage this very discussion with businesses and organizations is through looking at sustainability from the concept, or from the pillars of ESG. That is from environmental sustainability, social sustainability, and then governance. I mean, you also hear people that talk about economic sustainability as well. So it's part of we keep that silent at Climata, but it's part of the core deliverables that we look at. Whatever we are designing in terms of ESG has to make economic sense for the business as well. Right? So within the context of ESG, or within the lenses of ESG, we can be able to see how we are impacting each of these. So we have other systems that we use in place to help us properly match these. For example, we'll talk about it later on. We deal with something we call material map. The material map is to see how the impact of climate change, or basically how the concerns about environmental sustainability, concerns in social sustainability, and concerns in governance is impacting your business and your business model. So this way you can point out, you can map out, okay, these are the risks, these are the ESG risks that pertains to my business, and these are the opportunities that I can get from this. So this is how we mean when we are urging people to embrace ESG. It's about showing them, helping them to build more resilient businesses. So in order not to digress a little bit, just coming back to context, why is ESG important for businesses? Why is it important for even startups like yourselves? The first point here is that there is a growing emphasis, on building resilient businesses, and one of the major things that is also driving that is given the fact that the impacts of climate change are affecting geographies. I mean, when you put on the television, you hear of fires, flooding everywhere, and happening all over the world, right? We have our own unique problems here in Africa. We have our own unique problems here in Nigeria as well, and we're beginning to see how that is also impacting businesses as well. For example, if you check out our Climate website and go to our manifesto page, you'll see reasons. You'll see things that we've identified. This is why we do what we do at Climate. We've identified a couple of ways that the impact of climate change is going to impact and affect businesses. And let's not forget that businesses are the backbone of our economic institutions. And also, let's not also forget that when it comes to poverty, Africa happens to be one of the poorest regions in the world. And given all those dynamics, we are still more vulnerable to the impact of climate change. So what this means is, for us at Climate was one of the manifesto for us was we are positioning ourselves to be the consulting firm that can help organizations properly identify and prepare themselves against the impact of climate change. That is by addressing the risk, the risk factors that applies to their business model, and also help them uncover opportunities in the process too. Because people always look at it from the risk aspect alone, But the truth is there is a lot of opportunities inherent, by just addressing ESG concerns in your business that can help set you apart and different from your business, from your industry. That is what we're selling actually. The competitive advantage that gives you. So a lot of what is driving this communication is really based on the potential impact of climate change, which is already happening across different sectors, right? And for example, think of it when we I'm not praying we get to that, even though every indication is pointing us towards that. When the world gets hotter and gets to that 2 degrees centigrade, point, and I mean, think of how hot everywhere is right now. Right now, we are 1.5. We're approaching 1.5 degrees centigrade at the moment, and think of how hot it is, and then think of how hot it will be, in a 2 degrees centigrade position. Even currently, as things are, with the high temperature, a lot of businesses are finding it difficult. It's more difficult to do some kind of businesses. So what this means is, before I get to that, also, when you look at the problem of flooding, when you look at the issue of flooding, flooding has already impacted and affected a lot of businesses in different geographies. For example, in Lagos State alone, we lose about $4 billion from flooding every year, every day or so. Yeah, I think it should be every day. So that's a very scary metric to pursue. Whenever it floods, we lose such amounts just in a day, just because of such exposure. So think of what that does to businesses that needs a stable environment to operate. For example, think of how that impedes logistics. For example, I mean, if you order for a goods, because of flooding, you are likely not to get it in the following days because of the risks that already poses on logistic companies like that. So these are some of the concerns that is also important that businesses start to consider how and why they should integrate ESG into their business. Another thing is also for the sake of resiliency, long-term resilience in addition to profitability. And this already is advocating for businesses that meet stakeholder expectations and that have sustainable business models. So it's becoming more appealing for even investors and even customers. Given given these concerns we mentioned around climate change and other impacts, it's becoming something of a concern. For example, you have customer groups demanding in much more developed climes, demanding for sustainable and responsible product and services alternatives. So that means if you're not offering me an eco-friendly fabric, for example, I'm not likely to buy from you. Now there is a trend driving that, and that happens to be when you look at the composition of the world population. You have more of millennials and Gen Zs around that segment, and this also happens to be one of the category of people or individuals that are more aware and are looking for ways to address the issue of climate change. They're more aware of the impacts of climate change, and they're looking for ways to do things about it, right? So this is also driving that trend as well, and so they're placing demands for such things like it. And the same thing applies to investors as well. We have a couple of investors that are they're seeing the forestanding part of climate change, and they're looking to go to channel their investment towards more impact focused ventures, right? So this has kind of placed premium for companies that are coming with this as a differentiating factor. So you're building a ag tech company, and you're not just preaching what every other ag tech company is. You're also showing me how through your product and services that you're offering to your customer group that you're also helping to address the impact of climate change, help them address and build resiliency, right? So there's a lot of things, in fact, that will be coming up very soon. We are looking to get in partnership with a key organizer of an important event to see how we can, we'll get to that point later. But yeah, this is something that is very key, because we're trying to, across sectors, to ensure that businesses are aligning themselves towards ESG, and we should help them, help the target audience they are meeting address some of these concerns. So another thing we need to also consider is another thing that is really driving the reason why ESG is important in business settings right now is also doubles down on what COVID-19 did. So the COVID-19 pandemic has actually, exposed not really like, not more like exposed, it's more like, shown us what it means for such impact, or such occurrence that has a global effect, what it could mean, right? So when you talk about climate change as well, these are risks that are also that have a global influence as well, right? So it could manifest in different forms across different regions. For example, in Africa here, you could be talking about hotter climate, hotter climate that I like. I mean, if you look at the simulations out there, it's scary. Africa is red, literally red. So what that means, the temperature, the height, it's showing that we're going to be suffering more from heat waves and the likes. So for some regions, for example, it could be flooding, excessive rainfall and the likes. So these are some of the things that are of concern to those category of individuals. And what these are showing us is that, for example, during the COVID lockdown, there are some companies, there are some sectors that are yet to recover from the impact of COVID-19. So that is a perfect example of what could happen to our businesses if they are being if they are prone, or if they're exposed to the risks that climate change also offers. So COVID-19 was a very good example. It showed both and how it could hurt businesses, and also how it could actively demonstrate in helping us reduce our carbon footprints. That's if businesses are operating in a more sustainable way. It even proved to people, to critics, that yes, businesses are actively, due to the human activities, that humans are actively responsible for the warming of the climate as we know it to be. Right. So those are some of the things that are also evident right now as to why businesses should. For example, a lot of businesses lost a lot of they lost their profit margin. A lot of businesses sales reduced. Some are still recovering. That's why you start hearing a recovery plan. You start hearing government stimulus and the likes, just to help businesses, even parents. If you can remember them when on the onset of COVID, to even pay staffs, companies had to source for government aid just to do that. So this is a perfect example of how our economic engine can be brought to a halt just by something of this nature. So what this means is that companies are using this as a wake-up call. That is, smart companies, not every company anyways. Smart companies are using this as a wake-up call, and they're using ESG as a risk management tool to protect themselves by first analyzing and understanding how they are exposed, what are the risks that are inherent to their business model and operations when it comes to the ESG. And the good thing about the whole thing is that we also go as far as identifying the opportunities that are out there for you as well. So in the long run, you're building for resilience. You're building, long-term, resilient businesses that can, last the test of time, right? So you look at another final factor here tilts majorly on the investment side. So for example, excuse me. Yeah. So for example, stakeholders and investors, they are seeking to understand how those they are investing in are trying to address the climate-related matters that applies to their business model and operations, right? So this is seen more on impact-focused investors, which is already growing right now as we speak. I mean, we have more impact-focused investors entering the investment ecosystem, seeking for sustainable investments to participate in. We'll look into details as to such examples, but yeah, this is another reason why startups and businesses at large should consider doing this. I mean, we'll look at the business case, in-depthly to understand how these factors are affecting us as a business.
Hello, sir. We can't hear you. Can't hear the audio, sir.
How long has this been going on?
For quite a while now. Let's say 10 minutes plus now.
Are you allowed me to be speaking for 10 minutes?
I thought you guys knew about this because Emmanuel said something. Yeah, we couldn't hear anything.
I'm projecting, so I couldn't. Sorry about that.
Oh,
Ben, what's happened now?
I didn't.
Ben, so all those who have been. Oh God. Yeah. Sorry for that. So what was the last thing you guys said?
Yeah, this was you were talking about.
I was talking about what?
You're on the first. That's the slide you just showed now.
This one.
We're discussing. Yeah, yeah, yes.
I was discussing
Where how
COVID-19.
COVID-19 impacted business. They are focused on ESG. How investors are looking towards pumping their money towards companies that are focused on ESG.
Okay.
That's the last thing I heard.
So I also think I spoke about shareholders and investors that are seeking to, understand, that are seeking to make investments in impact focused
Yes.
startups as well. So yeah, this is very important because these investor groups they are already seeing firsthand the impact of climate change, even in their own daily lives. So they're also aware and of what climate change is about, and so they're also trying to see how they can contribute to fighting climate change by using their finance as a tool for sustainable growth, right? So we look into details as to what kind of investor groups are actively doing this in the ecosystem, right? So again, let me try to establish the objective for us at Climate Matter as to why we're doing this, and as to why it's important we, kind of like integrate ESG, right, into businesses and see how help them understand their risk and also the opportunities that are available for them. So for us, typically, the goal for us is to create organizational sustainability policy that will help shape and guide the roadmap for startups, which will ultimately help them to design um, which will ultimately help us design an ESG management system for these startups, which will be integrated into their business model and also operations, right? So the process from end to end is designed to help us, institute sustainability as a part of the core tenets of the business as well, right? So that's how we've designed the service to look like. So we were looking at the number of objectives, key objectives that are important as to why we're doing this, from how it helps us manage risk. Like I mentioned, ESG uh, is viewed by smart companies as a risk management tools. It's also viewed by investors as well as a risk management tools. That's why you see some investors requesting for your ESG alignment, ESG report, and the likes. Just to be sure that you're aligned, you're aligned sustainably, right? So they are doing this just for the sake of them um, trying to ensure that they are they are helping them protect their investment. Given that we have some of these factors we've discussed as regarding the impact of climate change and how that could disrupt business models and the likes. They are addressing ESG concerns would help an investor see, first of all, notice what kind of ESG related risk are these startups I'm considering for investment prone to. If you've identified it, that's a good thing. At least you can't. It's said that you can't manage what uh, you've not identified or something. So they did not share the idea there is that what you don't know, you can't even try to start, looking for a solution to it, right? So if you have identified the risk, that's a good thing. Then uh, also to see how you've been able to also build in resilience to help you navigate those possible impacts on your business. How are you going to address those impacts? So yeah, it's a good risk management tool. Like I said, that's one of the objective for us. So companies typically, and also including their stakeholders, they benefit from this as using ESG as a tool for risk management. And this could include, for example, that we have here, shielding a startup from a negative social media backlash, or fortifying a disruptive business model against regulatory change and effects of climate change across its value chain. So this typically um, touches on the social sustainability side of things. You know, a company might um, react to customer concerns negatively or in such a way that is not socially um, sustainable or is not ethically, or morally good. That could really mean a lot of negative impact for these startups as well. So that's one thing ESG helps us to address. It helps us to leverage on it as a risk management tool. Another value, another objective why we are integrating ESG into startups is also we use that to add operational value. We use that to add value to a company. I mean, we've seen that a lot of times with the startups we've worked with. Um, we kind of like help them transform even their product and services. Basically, through the process, it helps them transform and show how they are offering products that has feature A, and we're adding feature B in the product that has made the entire thing sustainable. That is even helping to impact even the lives of its customer audience in a sustainable way across environmental sustainability and social sustainability as well. So companies in all industries, they can benefit from proactive ESG management such as this, like I mentioned, and for example, human resource best practices, can help attract and retain the best talent, right? So, and this is also on social sustainability side of things. You know, it's something you do thoughtfully. Something you do thoughtfully, and once you've figured out how you can better engage with your stakeholder groups, both internal and external, it helps you build practices, human resources practices that can help you attract quality talent. And on the customer side, helps you retain and attract loyal customers because you're able to address some of the social concerns they have, and you're able to relate with them in a very good social way that they can relate with. So there's a lot of operational value that this confers on a business. And another objective, obviously, is we help them to identify strategic opportunities. So this is also touches a little bit on the operational value integrating ESG brings to the table. So in a nutshell, adopting a responsible lens, it can assist startups, in identifying new trends and potential growth areas. For example, one of the example we outlined here was for you know um, for a startup a startup that is designing or building a prop tech tool, software as a service product for developers within the real estate and construction sector, right? And so, for example, the example that we are exploring regarding as to how ESG is helping them improve their product offering was that they have a product that is allowing developers to consider ESG concerns, and this is something in the industry typically they're not really paying attention. The truth is that globally, the real estate and construction sector really they are contributing 25 to 40% of the global greenhouse gas emissions, right? So this makes them a high emitter sector, business sector, and there is need globally. There is need for that sector to decarbonize, right? So what this has done for this company in question is that it has helped them to identify and position themselves strategically, right? Even on a global scale. So we're not just talking about Nigeria; it's making it to expand outside of the country as well, right? They can now compete very well, even with their competitors, right? So these are some of the ways that integrating and considering ESG in your products and services offering can help you identify strategic opportunities that wasn't there, that was there, but just because you've not been thinking of, you can only identify it through thinking about ESG, right? And since right now most industries, especially in Nigeria, is not attuned to sustainable development, is an opportunity for any startup or any business that is willing to pay the price and do this head on, right? So it's a huge opportunity for businesses. And you can look at, as I'm saying all this, as I'm presenting to you, I want you to keep your mind open to be considering your own business model and operations, and to try to understand how you can identify some of these things and how some of these stuff I'm talking about can apply to what you're doing, right? So, for example, I think Ike Briggs, we're supposed to have a discussion later on sometime this week, to see how you can make your fabricating machines more circular, right? So this is one. We're going to see the opportunities. We're going to see the advantage that this gives you. It might help us reduce our production time. It might help us reduce, our material sourcing. So many, so like just keep an open mind. A lot of innovation is going to happen during that process because you get to understand and think critically about every component of your product, and to ensure that 50 years, 30 years coming, you still have access to raw materials that can help you produce those machines, non-stop. So this is regardless of what is happening around the mining industry. So, for example, we are using, there's a statistics that says currently the way the world is operating, we need about, uh, is it 1.5 or 2.5 Earth to sustain our requirements for natural resources, right? For finite resources as we have them. So that is not a sustainable means to live. We only have one planet, and if we are consuming more, if 7 billion people is consuming resources that is required or that is used for that requires 1.5 Earth size to give us such resources. I mean, it means there's a problem ahead, right? So at this point, is there any questions you might have before I move over to considering the case for making the business case for ESG integration? Do you have any questions?
Uh,
None from me, sir.
I don't have any questions.
Okay. Okay. Awesome. So, Adekule Imone is no longer here. All right. So yeah, what is the business case for ESG? I mean, we've talked about why it's important. We look at other factors as to the objectives around ESG, why we should do that, especially from the environmental side. Yeah, all these things are good. It's good to have a good environment, but we know that businesses are there to make profit, and it has to. And if you're expecting businesses to spend money, doing this, I mean, what is the need for them? How does that translate to financial returns for them? So, so primarily, what we tell business people most times is that when it comes to concerns about sustainability, it's about looking at how it's about seeing how the impact around cases like climate change could, how it could affect their financial performance, right? And as a result, it's really important to use a sound ESG framework, a sound ESG management framework to help startups and organizations mitigate the impact of climate change, that are relevant to their business model, right? So this is one major reason. It's about understanding that what you're doing with integrating ESG into your business is really first and foremost about helping you, build resilient business. First of all, by understanding how you're exposed, what the risk factors are for you within the context of ESG, and helping you to building strategies in your developmental plans that includes helping you you know manage and address some of the concerns that are available. Right? So incorporating these factors into strategy development, business operations, client engagement, and the likes can really help improve long-term risk-adjusted returns. So in a nutshell, what this means is by considering this, you might be making profit now because to you you think that the impact of climate change is not yet obvious or is not yet affecting your business model, even though there's a potential for that happening, but you just don't feel is something for you to do right now, maybe because you don't have much people doing it. It's not a thing right now in the country, and you don't really care actually. You just want to make money. Just concerned about the money part, and you feel like abandoning this now. And yeah, you're ramping up your figures now, and only for you within the next 5 years to fall into such kind of risks. I mean, that's by the time you start looking at the amount you're spending to mitigate some of these risks, it becomes too late, and you'll be spending more than, in fact, you'll be eating into the profit you thought you've made all these years, right? So that's pretty much what it is about, and it helps you, improve your long term risk in adjusted returns, even for yourself as a company and also for our investors. right? So, like I was saying, we are looking across three important pillars of sustainability. It spans across environmental sustainability, social sustainability, and the governance is required to power these two systems. Right? So for the environmental side of things, we explore themes, during the design of our process by considering factors such as climate risks, natural resource scarcity. If you need raw material inputs to, make your product, we look at pollution and waste and environmental, you know, opportunities as well, right? So, and at the end of this whole process, startups, they now have more information and tools at their disposal that they need to identify climate change related risks and opportunities. So this is where we conduct the materiality mapping, the materiality assessment of the business model, right? Then after that, we on the social side of things, we investigate important you know themes such as labor issues, product liability, and even risks such as data security. This is a huge and important aspect that companies need to pay attention to, even including stakeholder opposition to their product, right? So we look at these things. You don't force people what you're making. If they are complaining to you that you are sucking, you are depleting their water aquifers because you are making pure water, because you are running a very big pure water industry or bottled water industry. You can't ignore those guys. Or and if you are thinking of making profit, it's just a matter of time. You start whatever profit you've made, you might lose that during a lawsuit or something. Or for example, you're into manufacturing our FMCG product, and your waste water is being fed directly into the community's only source of fresh water, source. Do you think they were happy for you? I mean, those are risks. They are socially, social risks that are, that could come back to affect your company. And we've seen a lot of such engagements happen over time during the course of our work, interacting with clients, right? So again, another thing you look at is the ESG management system, that is required to help, on the board level of organizations to really rule and administer and enforce, sustainability principles as relating to the business. So and it's important, to ensure that the company is really effective in terms of their communication as to their ESG position as well, right? So those are some of the key factors as to why ESG integration is that's more like the summary of it. So we'll look into details as to why it's important we integrate ESG into our business model as business owners. And one of them is financial performance. Like I mentioned earlier on, financial performance, the impact of climate change could really affect the financial performance of a business over time. But that's on the risk side. Now, from this report I have here, there's this asset management company called Deutsche Asset Management Company. It's a German firm, a financial firm. They discovered, after analyzing over 2,000 research publications all over the world, discovered that there is a strong positive correlation between ESG strategies that are integrated into the operations and processes of a business and financial performance. So what that means is that when you have a business that are actually they have ESG integrated into their process and they are actually living it out through their processes and operations, I mean they tend to perform well financially, when compared to their counterparts, in the industry. And they also found something very interesting to show as to how unique our market is positioned. So they were able to discover that the strongest positive correlation for such kind of occurrence, was found for businesses that are operating in developing markets. Developing markets includes most of the African countries. In fact, includes Africa as a whole, includes Latin America as a whole. Just in a nutshell, the global South, right? This is the global South, makes up the developing markets as we know it to be. So what that shows you is that even in the developing countries like ours, smart companies are using this as an opportunity to, align themselves towards ESG and also milk the financial performance and financial benefit that brings to them. So, I mean, this is a good reason for any company operating within, a developing market to really jump on the ESG bandwagon. So this is a very important study. I mean, there are other studies from Harvard, Oxford, and the likes. They're also pointing as to how strong ESG integration or strong ESG incorporation into a business process is leading to good financial returns. Very amazing results, across all these studies that was conducted. So another key and important reason why startups and businesses needs to consider this is also on the part of fundraising, right? We mentioned earlier on that we have a couple of impact-focused investors that are trying to that first witness the firsthand the impact of climate change, and they're also trying to see how they can use their finances as a tool, for advancing sustainable development. So they're looking at sourcing for startups, businesses that they can invest in that are aligned, towards sustainable development. So that's a very important and key factor to consider. And what this means, you have direct foreign investment, institutions, climate funds, private equity, firms, venture capital firms, impact angel, investors, and even other responsible investors. They are increasingly expecting startups and the companies that they are considering for investment to show and demonstrate how they are dealing with sustainability issues within the context of ESG as relates to their business model. So this is important, right? Because we understand, and this is them using ESG as a risk management tool. So that is why you are seeing this trend happening within the investment ecosystem. So if you're a startup, if a business that's looking to attract venture capital, attract investment to power and push your and grow your business, I mean, you need to start, this integrating ESG into your processes gives you a better chance, right? Because you're not just presenting a company to investors that will make them good financial returns, but more importantly, you are presenting them an opportunity to put their money or to invest in a company that is also impacting the environment positively, impacting the community that it affects, the stakeholder groups that it interacts with positively. And ultimately, you also, they are also part of a startup that is helping to address some of the socioeconomic and environmental concerns we are typically facing across different geographies of operation. So this makes an investment deal attractive for some of these investors, right? So that's that for fundraising, and this is important. And also another thing that is important to consider for startups, or one of the business making the business case right now for ESG integration. One of the key things to consider here for startups is also you think about startup exit. So by the time we get to the financial side of things during this program, we'll get to touch on exit strategies. You need to think of an exit strategy for your potential investors. How do they cash out? How are you going to help them cash out when they are ready to cash out, right? So, but what we see typically when it comes to the investment community is that an investor would want to, have a typical, okay, when am I cashing out? So time, at what point is my investment going to mature, right? So typically, depending on the type of investor you are interacting with, if you are looking for venture capital, so there is a way venture capital works. So typically, a venture capital is actually designed in such a way that they have investors that are investing into the venture capital fund, right? And they call those guys limited partners. So a limited partner could be someone like me, a high net worth individual, or someone that's certified to be an investor, an angel investor. And let's say I'm interested in playing in investment into startups. So what I could do is to look for a venture capital firm. For example, we could look for Lofty Inc. For example, we could look for Y Combinator. For example, we could look for Keppel Africa. For example, we could look for BlackRock. For example, and I decide, okay, I'll invest 50,000 into your fund, right? So they do that. They aggregate such finance for a lot of people. So depending on the amount they are looking to raise, some firms can go as far as looking to raise 200 million or 200 million dollars, for their fund, So they look for investors. They could gather 30, 50 investors that will contribute to give that 200 million. then they use that to look for startups to invest in. That's how it works. So typically, those venture capital firms, they are in need to make profit for their owners. That's how it works, right? And then what is now happens here is that typically a fund has a life cycle of about 10 years on the maximum, from depending on the geography. So they're expected to make back a return for their investors by the end of 10 years. So when a venture capital is trying to invest in your startup, they're looking. You need to show them how they are going to get back their money within the shorter the better, but at least before that 10 years, within the 8 years or so. If you can show that to them, if you can demonstrate that to them, and it's making good financial sense for them, good financial returns for them, they'll be willing to invest in your business. So back to the to context here. Why thinking of collecting such kind of investment? You need to think of how you can show them a path to exit, and one of those paths happens to be through IPO, initial public offering, right? So we have a couple of startups that have done so in Nigeria. For example, Jumia has IPO'd. I think which other company has IPO'd in the country? That they IPO'd outside of Nigeria, of course. The stock market in Nigeria is not viable and it's not really attractive enough for these guys to do that here. So, but yeah, the few startups that have done so in terms of IPOing and even on a global scale, most of them go to New York Stock Exchange to IPO, or maybe any of these advanced, stock markets to release their initial public offerings. And it has shown that ESG disclosure is becoming a very stringent, requirement, for most of these stock exchanges around the world. So that what that means is if part of the exit strategy is to IPO at the end of, at a given time, and is part of the strategy is to IPO, let's say in New York Stock Exchange, which you are likely going to do, given the status of your company being based here in Nigeria. I mean, what that means is if you're not ESG aligned, you find it difficult to IPO in such kind of stock exchange. Why? Because you don't have this ESG disclosure available. So this is why it's important. And again, I mentioned about how funds and venture capitals raise money. So, and I also mentioned about how most of these private investors are already seeing the impact, first-hand impact of the effects of climate change, and they are looking to make sustainable and impactful investment. So what they are doing is they're looking for funds that they can invest in as such, right? So so in a nutshell, a startup exit is not just when it comes to the IPO part of things, it can be a deciding factor when you are looking to raise additional capital. For example, if you raise your pre-seed, let's say the first round you're going to raise right now will be your angel round, where you look for angel investors that will sign you a couple of first checks, maybe 25K, 10,000, 5,000, depending on the size and what you need. Or you won't exceed around that 50,000 and at most 100,000 for the angel round, right? So what that means is when you're done with this round, the next funding round that is likely to come up will be the pre-seed round, the pre-seed fundraising round. And at this stage, you look to raise bigger amounts from a much more institutionalized investor. You will no longer be pursuing angel investors right now. I mean, of course, you could look for angel investors that could write you a check depending on the size you are looking to raise. But typically, you'll be looking for venture capitals at that stage that can invest in your business as well. So what that means is that we have some of these investment firms that are already ESG aligned, and they can only invest in ESG aligned startups. So what that means for you is that becomes a problem, and that might be part of the exit strategy for your angel round investors. You're telling them, okay, yeah, when we're raising pre-seed, you can cash out if you want to, at that point, right? And so you see that makes it difficult for such investor to cash out at that point, and that wouldn't be good for you as a startup because you've burnt that relationship. And believe me, when you're looking to raise another money, you can't use those guys again, and they can't even help you because most of these angel investors, they have network. They can help you raise bigger amounts if you want, So I mean that's a costly relationship if it does damage there, right? So these are some of the reasons why it's important for startups to consider this. And then one last thing to consider in terms of case for ESG integration. Okay, I still have three more. Is regulatory environment. So typically, venture capital-backed companies, they are frequently, coming up with disruptive technologies and disruptive products or services and business model that, at the moment, are not yet, there are no adequate, there are no regulations, existing legal regulations at the moment. So what that means is it exposes such companies or such businesses operating within that, context. For example, see the crypto space, the blockchain space, and the likes. Quite a number of startups have been born. Fintech itself is having their own share of the game. So these are all new markets, and this is more prevalent in emerging markets like ours. Emerging economies like Nigeria and Africa as well, as we see. So what that means is that but by careful integration and careful ESG management, it can help a startup prepare for some of these regulatory interventions that could have a negative impact on the business, right? And so this is key. This is also one good reason why we are looking at, again, this is further to show you that ESG is a very good risk management tool that startups and businesses can leverage on, to build sustainably, right? So another point we could consider here is market access, right? For example, given how companies are structured, how companies are designed to be, a lot of startups are building products. By nature, tech products happen to have that advantage of reaching out or affecting or accessing the global market in general, right? So what that means for startups that have ESG integrated into their business model is that it gives them access to a wider range of markets and appropriately implementing ESG into their operations, into their business model really helps them, have access to more global markets, right? As it is. So what that means is, for example, if you're a Nigerian startup and you're building, let's say, a solution in the apparel sector, you make fabrics that has potential to be exported outside of the country. When you're trying to sell in countries like in countries in Europe and the likes, I mean, these communities or these countries are already advanced within the context of sustainability. They are really taking it serious, and what that means is your product will compare poorly when analyzed with competitors in such environments. Even though you might be crushing it here in Nigeria, but you see, by not aligning to ESG standards, would already prevent you from accessing the market you would have assessed if you are ESG aligned. And this is important for startups or businesses that are looking to use investor money, because by investor money, investor will only invest in your business if you can show them how your business can scale. So how your business can scale, meaning how your business can scale beyond Abeokuta, for example, how your business can scale beyond Lagos State, because for you to help them achieve their target exit value or their expected returns on investment, you need to be addressing a very big market, and as such, Nigerian market might not be even enough to accommodate that. So meaning you need to start looking for outside investment, as it may be, right? So that's one. Another thing very key to very important to notice on the issue of reputational risk. Many tech companies, they rely on their reputation for success, no doubt, and especially startups. They are vulnerable to such to negative reputational consequences as a result of they being too early, they're still trying to grapple with a lot of things, trying and testing things. They could make a lot of mistakes. In fact, a lot of mistakes is made during the startup stages, and some of those mistakes could turn back to be costly for a startup, and this could have it could have a huge impact on fundraising efforts, and also even market adoption and customer expansion as much, right? So anything that deals with reputational risks is also something that can impact these aspects of your business endeavors as well. So ESG, proper implementation and integration of ESG is a good way to manage reputational risk, given the way the framework has been structured. One last thing to consider here is labor productivity. It helps you to attract and retain skilled workers, which is a critical success to tech companies in most emerging markets. So this is also important because, again, like I mentioned, the category of people we have in the world that makes up even the larger percentage of the workforce happens to be millennials and Gen Zs. And like I said earlier on, this category of individuals happens to also be more aware about the impact of climate change and are actively demanding and interested in working in organizations where they can, really impact, across ESG factors. How they're not just working, they're not just earning salaries and like they also actively they're seeing how their work is helping them achieve these things. I spoke with some of the team members at UK Bricks and hearing them speak about how passionate they are about the fact that they are by just using plastics as a raw material, they're helping to address the environmental concerns we face in the country. I mean that's a purpose beyond whatever financial returns that potential that working in this startup would give him. Some of the team members that said so. I mean that's another thing. So it's a good way to attract and retain good talent in a company. So let's consider. So let's look at how we can help. Like I mentioned, this is a service that Climate offers, and Climate happens to be a partner organization with Incumas Incubator, and so we have devised a system or a process that helps us to successfully integrate ESG into startups and making them to understand some of the things I've spoke to us about earlier. And this is stemming from our expertise in circular economy, systems design, climate science, sustainability, and even sustainable city design. These are some of the things, the tools and knowledge and expertise that at our disposal collectively that is helping us to be better positioned to offer this service, right? And we use those to create an ESG policy that will help them design an objective roadmap and also ultimately inform a management system, an ESG management system for these companies that will be integrated into their business model and their operations as well. So we also understand that ESG factors are very dependent on different kind of business sector, even different markets, and even client objectives given the type of business model. And as a result, it is critical for us that we also design our framework and make it flexible enough to adapt, any sector complexities that could be available and that could also impact the overall business objective. So this is something we understand that we factor that into our process and our approach towards integrating ESG. And also, I would like to say here finally that our ESG integration approach, it ensures that the process of incorporating sustainability related research, data, and insight into strategy development is streamlined and tailored to the business model. So, in a nutshell, we're not just designing an ESG framework or sustainability roadmap or identifying risks and opportunities. We're also tailoring it down to your daily activities as a business, right? So this makes even monitoring easy. It makes management of those risk factors easy. So here, a couple of the process or the steps at which some of the key deliverables to watch out or to expect in our process. We usually start by conducting a stakeholder analysis, which, if you guys can recall, we've tried to infuse that somehow during your engagements and interactions with your customer audience, right? Excuse me. So we begin. This is where we start from by helping the businesses we work for to understand what their stakeholders' needs are, especially within the context of ESG, so that they can be able to capitalize on those risks, and also the opportunities that are presented. So by capitalizing on the risks will be to building mitigation and adaptation strategies across the risk factors presented, but more importantly to understand and identify the opportunities that are available to also use that to differentiate themselves in the market and ultimately building sustainable business in the long run. So this helps startups to really benefit from a more informed and active workforce, as well as access to better market information as a result of this step. So another thing we do, which is the most important part of the process, the ESG integration process, is to run what we call a materiality assessment, and this is important. We tend to look at your business sector, the value proposition, and then we use that to run across some standards that helps us to identify generally what key ESG risks that are already out there is your company exposed to, right? So that's what we're really doing on the materiality assessment side. We map out um, um, the climate related or ESG related risks as relates to your industry and your company, and then we use that to have an understanding of what risks your business is exposed to, and we also go as far as understanding even the company's operations. How is it impacting the environment? How is it impacting the people, and how is that impacting? How is the governance structure in place? What type of governance structure is in place to help these companies address these issues? So these are some of the things we look at in the maturity assessment, and at the end of it, we develop a maturity map for this company that they can be using. Okay, it shows them what risks they are exposed to, even down to their customer groups, the different stakeholder groups. These are the risks, that these guys are exposed to, because it's not about making your business itself resilient. How about your customers? If they are not in any way building for resilience, if you don't have customers, you won't be able to make money, right? So the maturity map or the materiality assessment goes as far as understanding every stakeholder in your value chain, how they are affected and what are risk factors for them, and how your solution as a business owner can help them address some of those things, so that in a nutshell, in the long run, what you're doing is to build a resilient ecosystem, a resilient sector, depending on how big you are operating in the market. And what this means is that by the time it's time getting traction and it's clear how sustainable, truly sustainable you are, this gives you a brand perception and it gives you more access to market share. So again, I would like to say it's a huge competitive advantage for companies to integrate ESG into their processes. Right. So another thing we look at is we now develop an ESG policy, because it's important we do this so that this can guide the operations of your companies, which also involves helping to set performance targets, and also articulate some of the fundamental values that the business expects its employees and stakeholders across their value chain to adhere to. Uh, and this is important so that everything is in line with helping us to address the issues we've identified in this stage, right? So those are some of the key deliverables. And we also develop a monitoring and reporting system for clients, so you can be able to measure your performance across the identified risk. Are you improving? Is it reducing? Are you managing that risk? It's a good thing to have an idea of how you're doing. If you identify that data security is a material issue for you as a company, what that means, you need to look for strategies that will help you, mitigate that risk, right? So we create a baseline, try to understand what it is at the moment, then start observing through the integration of accounting metrics across each of those risks. We'll be able to measure and monitor real time across your business activities how you are affecting that problem of data security. So over time, we can be able to say, yes, we've been able to reduce our risk exposure to data security as an ESG materiality impact for us as a company to 5%. So that means you can demonstrate to stakeholder groups, investors, how you are addressing that, and it's good. If I'm an investor, it shows me that yes, so my money is in a safe company. And if you come tomorrow and tell me you are looking to raise additional fund, I will gladly give you my money, because I can trust that my money can be safe with your company than as opposed to a traditional company that is not even concerned about that. So that's a good thing. What the monitoring and reporting system does, we do that, and then we develop also performance and impact management systems to monitor and capture the financial value of the ESG policies and objectives that you have identified, and see how that relates to business strategy, documenting, and the process. We document lessons that I learned from it, we can use to improve on whatever you already have. Then the most important thing is also on strategic communication. We also help clients set up, we help clients to set up a communication, their communication, across. We affect both their from pitch deck to their websites, to their product features. Like, we speak sustainability into what they do, right? and this is important so I can be able to, address and tell people, especially people within your community or people within your stakeholder groups, how you are helping to address some of where you stand when it comes to sustainability, and this is good, right? So we address stuff like that, and I think the last thing we do now is to we conduct retraining activities for all the employees and staffs and relevant stakeholder groups within the company's purview, right? And this is to ensure that they are properly aligned to execute and implement any sustainable development goals and objectives that the company must have developed during the process of doing this. So this is really it's something very eye-opening for organizations we work for, and it's important that we make it very clear for startups we are working with to ensure that to see the business case for them to integrate this, right? So so the good thing for you guys here is that as part of the package, the support package we are offering at Incumers, it's something we are more or less doing free. You've paid for it upfront through your agreement with us. So we are kind of like we are deciding to play the long-term game with you guys. I mean, it's not something you guys can pay for at the moment. So we just package all these things. That's why we said our support package, when you look at it, is worth over $160,000, right? So that's just been on the conservative side of things, right? So this is also part of the reason why what we offer at the program is very unique. I mean, you don't find this you hardly find this in any program. And part of what we're doing in Climate is to push this service even to other incubator programs, accelerator programs. We are in talks with some of them, and we are also looking to provide this as a course for their cohort as well. So yeah, you get firsthand this, and then this is a little bit about us. And so we're typically an ESG consultancy, and our goal is to enable African organizations and businesses to find sustainable approaches to their product and services offering, and in the process we'll help them to unlock opportunities that are beneficial to the business, the society, and the planet. So at the moment, this is who we are, and more that are not here. But yeah, you see, myself and Ben, and so we also happen to be partners here in Incumers, and so we will be more or less representing Climate for now here, depending on given the growth of your business. So as you guys advance and there is need to extend you across every other interesting individual we have on the team, I mean, we'll do that as well. Right. So yeah, we've worked on a couple of projects. This might not be needed for you, but yeah, I mean, these are some of the things we've done so far, and integrating ESG and the likes for companies, publications, and the likes. Yeah. So yeah, this is the end of my presentation, and if you have questions, I think this would be a good time to ask, and let's touch base on what you think. All right, over to you guys. Let me know what you think, the big takeaway, what you understand, and the likes. Ben Afana, there's no deliverable. Ben. Ben.
Man, I'm only remain.
Hello, sir.
Yeah, I'm with you.
Okay.